Good day to all traders. This is Waldo Alvarez speaking here, developer of the order flow software. I am using a synthetic voice for better clarity and to reduce ambient interference. In this video, I am going to run in script made by Jose Gerardos with some corrections. He is a financed futures trader from Ecuador, in this case, Top Step Trader. He passed tests with our order flow software and is going to explain you some details about it. He is also going to speak about the usage of some variables focused on the traders that start. Greetings traders, today I want to comment a little bit about the FootPrint being offered by Trading Future, a limited liability company from the package PickFlow educated version. It is currently at the version 2.5, is not the one depicted in this video. This is an older version. Specifically, version 2.1 is being depicted. It has some characteristics that have been added during the development of the tool. We have several modes to set the FootPrint. The traditional way, bid per ask. Here we have bid on one side of the candle and ask to the other side. We can also see a variation that would be the tight volume in delta. There is also a side delta mode in the ATAS style. As we can see, total volume by price position to the left side and delta by price level to the right side. Currently, Trading Futuro is also offering this superdom we can add to the FootPrint. In this way to save screen space. We have all tools from a single provider, because it's also offering volume profile, heat map, market profile, institutional volume, reversal indicator, order book, best bid ask, and trade detector. Additionally, a graphical tape. The superdom allows us to see the behavior of the order flow as we reorganize the information directly in the FootPrint. In this way, we can visually access bid liquidity, ask liquidity, market orders that are entering. We can see, for example, while the market is developing, how they are taking certain liquidity, if there is available liquidity to take. A significant level is automatically highlighted 251 that were on the bid. Afterwards the movement starts. We can see the history of market orders, and within the inside bid or the inside ask, we can access the information on the number of trades that are being executed, the volume of the trades that are being executed, and the maximum volume executed within the current spread. Having the superdom in this way really gives us a great advantage because we can see the information in development and at the same time we can see it organized in the FootPrint. This would be the volume delta FootPrint as I mentioned. A new feature of this version is that we can access the value area information within a period or candle. In this way, we can identify where the largest volume is concentrated within a period. This line that is here, this white line to the left of the delta, represents where the 65% of the volume is concentrated within this period. Can be redefined for instance to be 70%. We could also identify it visually, but it is always better to have something parameterized that helps us to access this information. We can see with this line that is here, the value area within a period. In addition to the features I mentioned, the FootPrint offers what would be a footer. The footer is the information that is located here below this table. This table, what it does is reorganize the information in a numerical way to be able to compare the market in development. The information that we can add here can be the accumulated delta that is updated according to the session that is configured in this case in the NinjaTrader platform. This accumulated delta will start to be calculated when the American session opens at 9:30 a.m. We have the maximum delta, the minimum delta of the period, the net delta, and one of the most important characteristics that we can follow when trading is the volume of the period. It is very important to always compare the relative volume when making entry decisions. We can see that this superdom is really very fluid. Currently, we're in a market of very volatile conditions where many tools can present problems. But this DOM has really not presented me with any inconvenience. It works in a very fluid way, regardless of the speed at which orders are being executed. Another feature of this footprint is what would be the visual delta. The same numerical information that we have below, maximum delta and minimum delta, can be seen in a visual way at the top. From the center to the left, we have the negative delta, and from the center to the right, we have the delta in a graphic way. This wick would indicate the variation, that is, up to this point, up to the maximum point of the wick. What was the maximum value of the delta? In this case, the minimum delta was minus 2,200. We see it in a numerical way, in the footprint, in a visual way, in this graph. From minus 2,200, the delta closed at minus 600. There was a huge amount of delta lost in that delta. From minus 2,200, it went down to minus 600. That's why this delta graph here shows us this wick. It shows us a loss of delta. Personally, I interpret losses of delta as losses of control by the participants. A strong negative delta is seller control, but a strong negative delta, like in this case, which went from minus 2,200 to minus 600, already indicates a loss of control by the sellers who are at the time controlling the delta. Finally, one of the features that can help someone who is just starting to use order flow tools is the commitment of traders, which is the COT. The COT is located in a numerical way at the top, in this red rectangle, and this cyan rectangle at the bottom. The lower COT refers to buyers, and the upper COT refers to sellers. In this way, we can really track the control within the period. The COT is a calculation, a formula that helps us to determine within the period, in the volume conditions of this period, who is pushing, who is controlling the price. It is a parameter that can help us a lot when making decisions, always looking for confluence between these two numbers with the entries we are taking. For example, in this period here, in addition to finding a strong loss of delta of minus 2,200, a loss of delta of more than half, we have that the buyer COT is 1,500 and the seller COT is 8. So the buyer COT is higher. This is the moment where a rebound starts up to this area here. We can get valuable information by simply comparing the numerical COT. If the lower COT is higher than the upper COT, we have buyer control. Let's see how the price develops upward. We have in each of the periods a higher buyer COT than the seller COT. 1,500, 800, 200, 1,400, 100, 100, 100, 800, and here we start to find that the seller COT starts to be higher than the buyer COT. And indeed, a small pullback is found at the price, shows us Let's see how this pullback has a continuation in confluence with a COT of 2000. In addition, some features that we can always configure in the footprint would be naked POC, naked unfinished auctions, that are auctions not finished. Here at the top, this white line that projects to the right are unfinished auctions. This gold line that projects to the right are naked POCs. Naked passage act as magnets for the price. Auctions not finished also act as attractors of the price, but based on another phenomenon that is a position in the market that is not yet closed. A battle that happened but was not completed. Many times the market seeks to close this, and there we can exploit this phenomenon to take ticks from the market. For now, that would be all from me. In the future, I hope to be able to share a review of the Pro version with the features it offers, including one of the most interesting, which is the reversal zone. That would be all from me. Have a good day.